Okay, let's work another problem related to uncollectible accounts. It's really important you practice these because especially when you're working the homework, working tests and stuff like this, you need to get very comfortable with working with the uncollectible accounts, the allowance account, and working with all the different various accounts. So let's put on our accounting glasses and let's get to work. Here we have a problem that has a whole bunch of numbers and it gives you a whole lot of conditions. It's really important when you see a problem like this that you read it backwards. Okay, you will notice that at the end of the day what it's asking you here is what is net realizable value of accounts receivable, saying, which is a fancy way of saying how much do we think we're going to collect? How much do we think we can collect out of this, out of our accounts receivable? So with knowing that, let's go ahead and go from the top down. We have at the end of the period, 12/31, at the end of the year, we have an allowance for uncollectible accounts of $10,000. That just means before the adjustment, before you booked bad debt expense for the year, what was left in the allowance for uncollectible accounts is $10,000. Here you have cash service revenue throughout the year. Cash service revenue is not a player when we're talking about uncollectible accounts. So please don't factor in cash service revenue. That's what I reinforced in class, that cash service revenue is about cash and getting cash for what you sell. $41,000 is credit service revenue throughout the year. And this is how much we actually sold in credit. So this is something that potentially could play a role. Cash collections from customers on account. When you see on account, you should be reading in your mind on accounts receivable. Okay? This is how much was collected on accounts receivable. On outstanding accounts receivable, we collected $18,000. And then it tells you at the end of the month, or I should say the end of the year, $51,000 is what we were owed. Okay? We're not adjusting accounts receivable at the end of the year. What we're adjusting, remember, is the allowance account and booking bad debt expense. Then we have some information here where it says using the aging of receivables method, $3,000 represents uncollectible accounts. This is how much we think we will not be collecting from our receivables. Okay, so we did an aging and we aged it out, and $3,000 we will not collect. And we're just noting that. For 2006, $1,400 is the uncollectible account expense. This is just the uncollectible account expense that was booked for the year. This is not something that we're factoring into this. What we're factoring into this is net realizable value. I mean, the expense that was taken is nice, but we're trying to figure out how much in the future we will collect of our accounts receivable. And then after the adjusting entry at year end, so this is after the adjusting entry at year end, when we booked bad debt expense, debit, credit to allowance account, the balance in the allowance for uncollectible accounts is $3,000. You'll notice a strategic thing here. This is exactly what you would expect. Remember we talked in class about filling up the tank, filling up the allowance account tank? In the aging method, in the balance sheet method, we fill it up to, we don't just blindly book the entry like we do in the income statement method. We don't just blindly book it. We're adjusting it up to the water level that we need. Well, we determined that under the aging method, the aging of receivables method, that $3,000 should be in that tank. So it should not surprise anyone that after that entry was made, whatever entry was needed, we made an entry to bring it up to $3,000, which that's exactly what you would expect in the balance sheet method. Making a debit to bad debt expense here. So we booked something here. I don't want to get to the amount because we're talking about the amount. It's confusing. And then we booked a certain amount to allowance for bad debt, and we filled this tank up, right? We filled this tank up until it reached what we needed, which was $3,000. Okay, we didn't book $3,000. We booked how much we needed to get to $3,000. Back to what the problem is asking us. What is the net realizable value of accounts receivable at 12/31? Well, let's start with what is accounts receivable in 12/31. Well, it's given to you right here, 12/31 accounts receivable. So you already have one element that you need to answer a net realizable value, and that's how much accounts receivable there is at the end of the year, 51,000. The only other thing you need is how much do you think you won't collect? And again, the problem, very bald face, tells you you will not collect $3,000. It even tells you an adjusting entry was made, unimportant where it was, but an adjusting entry was made to bring it up to $3,000. That reinforces the fact that $3,000 will not be collected. That's to adjust it up to that. So really, this problem has a lot of numbers, and it has a lot of information. All you really need to compute net realizable value is ending accounts receivable right here minus how much you think you won't collect, which is 3,000. 51,000 minus 3,000 is 48,000, and you're done. Okay? When you see a problem like this, the problem you get into is you start thinking, oh my gosh, this is like the most complex problem in the world. If you're just being asked for net realizable value, you just need to know two numbers. What is accounts receivable at the end of the year? And how much do we think we won't collect? Which this problem very clearly tells you. Now, I want to show you how these other pieces fit together so that you don't just go, oh, okay, I just know this, and that's all I need to know. You might be asked other things, right? So let's look at, I put some T accounts here so you can see. The 10,000. The 10,000 here is the balance before adjustment in the allowance for uncollectible accounts. Okay, so basically when we started, let me go ahead and put this out. Hang on. Okay, I put back two accounts here. I put the allowance for uncollectible accounts and uncollectible accounts expense. And what I want to try to show you here is how everything relates to everything. So for example, we know that basically before adjustment, we had a balance of $10,000 in the allowance for uncollectible accounts. Remember, allowance is a contra account, so it has a natural credit balance. So we were sitting with $10,000 in that account, and then an adjustment was made. We know the adjustment that was made got us up to $3,000. Okay, we don't know. We know the uncollectible accounts expense estimate for 2016, right, is $1,400. So we know that the adjusting entry that we make once a year, remember December 31st, was $1,400, and that got us to $3,000. Now, unfortunately, we don't have enough here to tell us what the beginning balance was, because this is the ending balance before you adjusted. This is how much water was left in the tank before you adjusted it to $3,000. But there's two factors here, because as you write stuff off, you debit allowance for uncollectible accounts, and then you write off the accounts receivable. We don't know that. This problem doesn't give us enough information for that. And we also have another unknown. We don't know what the beginning balance was. But I don't want to over-focus on this. What I want to show you is that the $10,000 would have been how much we had left in the allowance for uncollectible accounts, and then a $1,400 adjusting entry was made to get it up to $3,000. We don't know what these two factors were. So we debit uncollectible account expense, remember that once a year, to show the world this is what we think we won't collect. And then that brings the allowance account up to $3,000, which is the sum total. Remember, we're adjusting up to a certain number in the balance sheet method. We're not just blindly making a certain percentage of sales. Let's see what else. $4,700. This is cash service revenue. Here's cash going up. Let's see. There's cash going up, and you will notice that cash service revenue here is going up. Then we have $41,000 credit service revenue. Well, obviously there's some credit service revenue. You notice that when we experience credit service revenue, our accounts receivables go up. Cash collections from customers on accounts receivable. Okay, so our accounts receivable drop because we're collecting on accounts receivable, and you notice we're collecting cash, $18,000. $51,000 is the balance at the end of the period here in accounts receivable. So we're told what this is. You will cleverly note, one of the reasons I went through all this trouble is you've been given enough information. You can't solve for this, but you've been given enough information in this problem to solve for what beginning balance was in accounts receivable. The biggest problem you have is you don't know how much accounts receivable were written off. So you don't quite have enough information. But the big thing I'm trying to communicate here is all these pieces go together. All these pieces go together. These are not working in isolation. You're able to debit and credit and debit and credit. When you are making the year-end entry to refill the allowance for bad debt, you're doing it here. You're debiting uncollectible accounts expense, otherwise known as bad debt expense, and you are filling the tank up to get it to $3,000, which is what you were told it should be at. You got beginning accounts receivable. We don't know how much was written off. But you can back into things. If you're given everything except for one element, you can back into things. And I wanted to show you cash service revenue, credit service revenue, and of course, the collection of that cash. So let's let's review. It asked us for what is net realizable value of accounts receivable, which is fancy accounting talk for how much do we think we'll actually get. To answer that, all we need to know is what is ending accounts receivable, how much are we predicting we're going to collect. So ending accounts receivable, it tells you, just bald face tells you right here what it is. And then we subtract from that what we think we will not collect. And using the aging of receivables method, it clearly tells you here 3,000. And it even tells you there was an adjusting entry made to get it up to 3,000. 51 minus 3,000 is 48,000. And that would be the answer to the question, what is the net realizable value of accounts receivable at 12/31/16? This type of problem you can expect to see on the test. You can expect to see it in homework. You can expect to see it in practice and review. We expect you to know the different components that constitute uncollectible accounts. The biggest thing is, read the problem carefully, work backwards, because that way you're able to more accurately identify the distractors. I hope you found this video useful.